Hey guys, Rajiv here from Financial Hub India. So in today's Nifty analysis, there is nothing to talk about really because all the setups and all the lines have already been drawn in previous analysis and the market is just following those lines or those key levels. So I would say if you're not following my Nifty analysis, then you can just go back to my previous analysis, those videos and trade setups, the chart setups in those videos, in those analysis, and then come back to this one. So it will be easy for you to follow this video analysis. So right now we are in Nifty daily time frame chart, and these are the key levels we have here. And right now if you see, the price is almost near to the target resistance level. So here I think in my previous analysis I missed this line here, so I just want to clarify this one. So here we have a resistance zone from here to here, Now why this is a resistance line, this is pretty clear. We have a clear-cut sell-off momentum right from here. So we have that bounce from there. So we have this line. Now this line comes from here, 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 and here. So I would be preferring this level of resistance rather than this one, because I can see most of the order flows are happening on this level of resistance here. So I'll be exiting my long positions right over here and not over here. All right. So the order flow on this resistance in terms of this was the resistance line. First of all, the bounce happened here, and then next time price comes back up and tries to sustain above that level, giving a breakout. It doesn't sustain, which shows the strength of the seller's build up over here. And then the next time price comes back again here, we can again see if the price is reacting to that level, right? Price tries to move up, doesn't sustain, and then again touch the level. So many order flows are happening over there, right? And then after a breakout happened here, again you can see the price reacted as a support level here. It went down and then bounced back up after a close above that level. And then finally this close didn't sustain and we fell down. Alright. So looking at the price action behaviors on 10.116, my target will be this level first. Alright. And then once I see price sustaining above this level of resistance and giving a breakout, and then on a pullback, or maybe if I get a breakout structure above this level of resistance, it happens, and I can think about to go for a trade. Now, since our last analysis, we have been discussing that the Nifty is moving in a flat market structure, and until our last analysis, price was trading near about here, and here we have been tracking the 60-minute time frames or 15-minute time frames for a breakout structure, right? And finally, we got a breakout over there. And this is our private Telegram channel here. So here, let me hide the thing. Okay, so here you can see the update over here. The buy entry triggered around the level of 9970 here. So after a hit over here, then we had some internal resistance target using the 60-minute time frames, and then we have these resistance levels or resistance zone as our ultimate target here. Now let me go down to 60-minute time frames and show you the trade. So in the 60-minute time frames, we have been facing this resistance level, price breaking above this level of resistance here, or resistance layer here. It formed the entry formations, which we like to see above the key level of resistance, or while the breakout is happening, that time to form. And then finally here we were able to hit our first target right over here. The first target comes from right over here. Alright. Which is not much visible in the daily time frame. So in 60 minutes we had this first target reached, and once the first target is reached, then we like to see the price action reversal formations and to have an exit, or else we sit for the ultimate target, which is the resistance level from the daily time frames, right? Now while exiting the trade, there are different ways to look at it basically, and in today's session I just want to focus on the exit strategy, because about the chart setups we have talked a lot in our previous two analysis videos. So for the exit, so to exit a trade, we have two different types of methodologies in our courses, Financial Hub India. So one methodology we use is an aggressive exit strategy, and the other one is the conservative, or you can say defensive exit strategy. So the difference between both the strategies is that in aggressive exit strategy, once you see a breakout happens, generally you get a one-way momentum for some time. All right. So we just want to be a part of that one-way momentum. We want to sit in that trade till the time it is in a momentum of that breakout push. Once we enter a trade, and then once price reaches to our first level of target, for example, this is our, for example, we entered here, and this is our first target. Now we want to play it very much aggressively. If we see the price is really breaking this level of resistance smoothly, then we want to set. But if we see any kind of turns happening around this level, right after hitting the level of first target or the first resistance level, we are not really that much interested to sit in this trade anymore. And in that case, if we don't see any kind of reversal formations in terms of candlesticks, because the candlestick formations give you an exit right on the tops. All right, and in that case, if we don't get it around there, in that level of resistance, we try to figure out some key levels around that level and a break of that key levels, or if we see the price is not sustaining the key levels near to that level of resistance, then we exit the trade. All right, so which is the case over here. So keeping this aggressive interest strategy in mind, if you see here, price hits our first target right over here after an entry around here. We don't see a price reversal formations around here. Do you see something? We have nothing really. Price hit the level and then it's really sustaining over there, and suddenly you see a push towards downside. So in terms of what we talked about in the aggressive strategy for exit, we try to figure out where the key levels are. So we have a flip support level right over here. If I define it perfectly, then it will be this one. If you see price went above that level of resistance and it sustained there for 1 hour, 2 hours, 3 or 4. For 4 hours, it's actually almost 5 hours. For 5 hours, price sustained over there, above that level of resistance. And then finally, so if this overall trend momentum is supposed to be continued, then for me this flip level should be respected over here. And you can see the importance of this flip level. And after a breakdown, it again came back up and stopped right on the level, and then again it went up. So if I am looking at it for an aggressive exit, then I should be exiting right below this level, and then in that case my profit will be this much. And the other strategy, the defensive strategy, in that we are not worried about the breakout momentums. So if we have this one and a breakout happens, let it have its primary move, or let it have its momentum. So after a breakout, if it's moving with a momentum for the breakouts here, then after hitting our first target, if it falls from the first target, in that case we don't worry about this fall over here. All right, and we want to stick with the trend build up right over here, the overall trend build up we see in that. So where there will be retracement, because see, in our aggressive exit strategy, we are saying we will be exiting right below this, but a fall below this doesn't change the trend. So here, after this momentum, price came back down here. It doesn't mean the overall uptrend is over, no, because there can be some minor swings, there can be some minor retracement sometimes, like here, and there can be some major retracement. Both the swing are a part of a trend. So it's okay, sometimes you will be getting small retracement, sometimes you'll be getting bigger retracement. So if we are always exiting using the minor retracement, then we will never be a part of a bigger uptrend. So in terms of the defensive exit strategy, where we look to write the bigger picture, the bigger trend in the market, so mostly we look for the change of trend levels. So as you know, we already discussed the change of trend levels of the last higher low. Last higher low is the change of trend level in most of the cases, but there are exceptions. So it's just not only the last higher low, there are other criteria, other terms and conditions are attached with this concept of change of trend level. This is just a basic theory I'm telling you. So we follow this change of trend level in brief in our Financial Hub India course. In general terms, if we just follow the change of trend level here, until the time the last higher low in an uptrend is not broken or price is not sustaining below this level of change of trend, till that time we don't say that. Till that time we don't say that this trend is over here. So just following that concept, we start right from here. We're making higher lows, right? So this will be the case here, and following this change of trend level, the last higher low comes right over here. So till the time we are not going below this change of trend level, last higher low, we are not out of the uptrend here. So till the time price is sustaining this change of trend level and not falling below this change of trend level and sustaining below this, we are not getting out of this trade. and we are with this trade here. All right, and remember the change of trend level always works as a good level of support or resistance. So if we have this, and this is our change of trend level, so price comes back down here, this is a good level to buy, to trade in line with the uptrend here. All right, so in that case this level will be our stop loss following level, and if this level is sustaining, and which you can see that price coming back down here really sustained this area of change of trend, so we are still in this trade based on the defensive exit strategy. Now when I say a level to sustain, it doesn't mean that if this is my level and price comes back down, have some false break and goes up, this level is broken. I don't mean that. I mean, a lot of people think like that. If 9686 is a level, I'm saying, so they think 9685 is a break of the level and my stop loss is it. It's not like that. It's not like that. So there are more to this. There are more to this concept of looking at a key level break. What do you mean by a key level break? A key level break is not a break below 9686. A key level break doesn't happen like this, that if your key level is 9686 and 9685 is a break of key level. Because in 80% situation, price always breaks a key level with a false break. So you need to understand those false break concepts. And in the fundamental price action course given in the YouTube, I created 2 lectures over here based on false break 1 and false break 2. So those will give you some concept of how to look at a key level break. What kind of moves are considered as a test of a key level and what kind of moves are considered as a break of key level. So if I'm saying my stop loss is below the key level, it is not on 9685 when the key level is 9686. No, it's not like that. So there are more in this concept. The only thing I want to mean is that I'm tracking this level 9686, and if this level doesn't sustain, then I'll be out of this trade. So the same thing is in here. This is my change of trend level, and if I see the price really not sustaining below this level, then I'll be exiting my trade. So the question is there a particular stop loss I'll be placing? Yes, there is. It's not like I have not placed any stop loss and I'm just looking for some parameters to match and then only I'll be exiting. No, that's not the case. In that case, you can lose big. So below this level of change of trend, there will be a stop loss placed right before the market even hits this level. So I know where I'm exiting. So anyways, that's a part of the advanced course. Now here, what to do next is that we are now trading above this key level of resistance. So far, we are still in this trade. If you're following this trade with the defensive stop loss strategies, so in that case, once we are here again, then again you can decide now that what kind of a stop loss you want to place now. Now, if you want to play it aggressively, so in that case, our stop loss may go below this level of resistance. This is a key level of resistance now. So if you see the price is not sustaining below this level, you can exit immediately. Or else, for a defensive kind of stop loss strategy, your stop loss will remain here till the time we don't get a new higher low. And again, it qualifies the criteria of being a change of trend level, which happened in here. Then we can follow that one. And finally, I can see my ultimate target resistance is very much near to the price action basically. So I'd be preferring to exit this trade around 10,116 in this level instead of waiting for this level here. All right. And then my strategy will be I'll be looking for price to go above this level of resistance, giving me a breakout. And then once I see a breakout happen, then on a pullback I can have a trade, or while breaking out, if I see some breakout formations, I can have a trade. Or else, since we are moving in a flat market structure here, so definitely I'll be looking for some sell signal formations here to trade this channel. The overall structure of the Nifty is flat only, right? So if we get something, if we get some sell signal over here, then we can go for a target up to here and then go for a target up to here. Now, using the 60-minute time frames, in case I see price coming back down here again, then I'll be looking for buy signals. Since change of trend level was here for this trend, and then price coming back down respecting that change of trend level, and also we have a key level of support here. All right, so this will be a nice level for me to look for something to buy if we get it. All right. So that's it for today's session, and I'll get back to you next week. Thank you for your time.